We've got our guests with us as well this morning, Peter McGuire and David Lennox joining us. Peter, great to have you with us as always, and David, you too. Let me kick off with you then, Peter, in terms of what you're making of this rally, obviously showing that rush towards safe haven buying, but how much further do you see the potential in gold?
Well, I think it's been an enormous rally to the upside, as we're all very conscious of. How much further can it go? I mean, that's a hard question to answer, but why can't it take a 1600 handle out sometime in September? There seems to be solid momentum to the upside. It's very, very strong fundamentals that are driving the uncertainty, and I feel as though that there's more capacity over the coming years to probably trend far higher than what it is at the moment. Are we going to hit that 1950 number or close to it that we saw many years back? Who knows? It may just happen this time round. It's up 30% in the last year, and I think momentum's going to keep it longer and stronger.
David, what explains the 6-year high in gold? And would you say that, now that there is an escalated fear of a trade war between US and China, you've got the US yield curve inversion at one end, which is really bringing about those fears of a recession which are impending. Do you think it's just a flight to safe haven assets like gold which is leading to this uptick?
Look, one would have to say that when you have a look at what's happening in the gold market, certainly the fear of recession is the key at the moment. And with that fear of recession comes the fact that most of the reserve banks around the world, or central banks, have in fact moved to start cutting interest rates. We've seen several countries where that has happened already, including the US. And the other factor that has to be brought to mind is that with the fear of recession comes the possibility that quantitative easings will be reintroduced by all the central banks. When we saw that last time in the economy with a uniform central bank activity in terms of interest rate cuts and quantitative easing programs, that's really when we did see the gold price rattle up towards that $1,900.
We're also seeing quite a bit of support coming in for gold from the global central banks because a lot of the countries have been adding to their gold reserves because we're seeing the overall growth slow down, the geopolitical tensions, etc., rising. Do you think that this is likely to continue given the fact that we're seeing that diversification as well away from the dollar?
Yes, we have seen central bank activity in
Peter, that was for you with respect to what...
Oh, sorry.
Yeah.
Pardon me. Yes, I feel as though that there's more drive to the upside, quite simply. The uncertainty, as David mentioned, interest rates ratcheting down. And, of course, you've got these ongoing discussions as far as trade wars. How much further and how much longer is it going to be until there's a deal on the table? So all of this uncertainty coupled with tensions in the Middle East, with the Iran situation, uncertainty with Brexit and what's going on with the Eurozone, label them all together and then you're looking at inverted yield curves. That's what's assisting in driving this higher. And that's going to be I think, one of the major inputs over the next matter of months. If none of these issues are put to bed or they're put to bed with uncertainty, then you're going to see far higher pricing.
David, I also wanted to understand then, what levels do you foresee for gold? We're already at a 6-year high, but would you say that these moves are sustainable? Where do you see gold headed in the next 3 months and then, of course, the 6 months and 1 year time frame as well?
Look, certainly at this stage, we've got an end of year price forecast of 1,500 to 1,550 US, and you can see already that the gold price is sitting near that. So just over the rest of this year and probably for the next 3 months, we're not expecting to see much of a movement in gold, primarily for one reason. The US dollar has remained stubbornly high, and there's a negative correlation between the US dollar and the gold price. We really do need to see that US dollar roll over and back away from 97, where it's been trading, to 98 for some time. We need to see it back away from that number and perhaps head down towards 96, 95. If that's the case, then we will see gold prices rally higher. At the moment, we've been calling that in terms of the lower US dollar. Hasn't happened. So we really do think that gold's going to respect that negative correlation, and that's going to keep any rally in the near term going into the end of this year in check.
I would like to extend that question to as well, David, because, Peter, because analysts are predicting that we could see gold in the next 3 months itself, inch up further than 1,600?
Well, there's every chance you could see that Christmas rally. And while I take on board David's comments, and I agree in many ways, I think that also you're going to see uncertainty coming from the China zone. What happens there as far as the pricing of the renminbi? I feel as though you could hit many people are saying a 7.5 sometime in 2020. So that's going to cause, again, more drive as far as gold pricing. And I think that overall uncertainty is going to probably push it higher. So by end of year, you're sitting at 1550 now. You're up 30% in the last year. If you look at silver, it's up 30% in the last 4 months. I think that momentum will continue. US dollar index, probably that 97, 98 trade. There's nothing there to really push it much lower than that unless you see something dramatic happen, and I'm not sure whether you will. So there's that part of it. If you're saying 6 months out, it's probably got the best part of a 1650 handle possibility, and why not even higher than that for the year, another year out. So I feel as though that there's still momentum to the upside.
All right, still momentum to the upside. That bull wave in gold is here to stay, it seems. David, as well as Peter, appreciate you taking the time out and joining in with your take on the rush for gold and the kind of move that we've seen in gold prices of late.